Good evening everybody, welcome back to a Chart Nerd Technical Analysis video. Today we will be discussing Veracity. The ticker is VRA against USDT on the weekly time frame. So looking at this fractal for VRA, I think right now in this sort of accumulation range, we're going through something very similar from the last sort of accumulation range in the previous cycle. So you can see from back here in December 2019 all the way in towards sort of January, February of 2021, we had this range where we had a double bottom and some sort of double top here. So we had two highs and we had two lows, a key level of resistance before breaking out and essentially taking off in this massive mania phase last cycle. So when we actually took this resistance out, we had a really large impulsive move for VRA, and from its lows back here in the last cycle, it rallied up approximately 26,000%. So you know, this thing can move, and I think fast forward to where we are now, we're doing something very similar. So you see here where you start off, you've created the level of resistance and you created the level of support. Right here we've created a level of resistance and we had a level of support that was created. Fast forward, you've got a second high created by followed by another bottom on the same level of support. Right here we had a second high. We did have a very impulsive move and a breakout, but it was a deviation point and we actually got rejected and came back into this pattern. So this was our second high, and then we came back for the second point of contact on support. So you could say this is some sort of macro double bottom or accumulation range where we're caught between a range very similarly to how we was back in the past in 2019 to 2021, and we're looking for a breakout very similarly here, where in the future we could see, I was looking at about a 30 cent target for VRA. I had that in my charts from a 1618 on a fib that I got on the charts. So I think 30 cents could probably get met eventually down the line, and we could be doing something very similar into the point of where if we look at the level of resistance here, so from the second point of this double bottom in the past, we came up, created a level of resistance, pulled back, broke above the key resistance, turned it into support, and then went for the break. Fast forward, right now we've just created a double bottom. I think we've confirmed our resistance point, so I think we're somewhere around here, and we've just confirmed the resistance, and right now we could potentially pull back for a higher low before breaking it. So if we can come back over the next couple of weeks for a higher low and eventually break out, I think it gives more probability to the likelihood that we're going to start retracing back to this these local highs, just like this move did here. Once we eventually got back above its key resistance, it back tested for support and didn't look back. So right now we could be doing the same thing where we're just looking to come back for a higher low before breaking out, confirming it as previous resistance as support, and then looking for the continuation. So right now I think for me it would be nice to see a higher low in this sort of bottom that we've put in. And on the charts in X, when I was posting earlier on X, sorry, I was looking at this potential sort of inverse head and shoulders where we've ran into a key level of resistance right now. If we can pull back for the right shoulder and then look for the breakout, I think we've formed a bottom structural pattern here, and we could have a breakout target from the neckline of the inverse head and shoulders to the head. And once you do break out of this resistance level, we could be looking to go back up to 0.007. So if we can pull back for the next couple of weeks and then go for the break, I think it would be healthy. And if we do come back to meet the same support level as this left shoulder, we could then look for a bounce and a breakout of the head and shoulders, which would be 170% roughly move from that low if it does come. So it's all about getting back above this key level of resistance right now for VRA, which sits at 0.0039/4. So the 0.004 range, we need to see closes above that in order to validate continuation back up to these previous highs of 0.011. I mean, if you do look back in the past though, we have had this previous level just absolutely smashed out, and you'll notice that we can have these very impulsive weeks, and if we do get that over the next couple of weeks, we could come up very quickly to this resistance level and actually smash through this 0.004 range. That's also a possibility, but the only reason I think we're going to meet it as resistance is because if I get the 20 EMA on, the weekly 20, right now we fell, but from this deviation point we came below the 20 right here, and we never saw it for a very long time. And right now we've retested this key support zone for a double bottom, okay, so for the second bottom here, and we're seeing relief. but on this relief, we've come up to the same local high as before, and we've equally run into the weekly 20. So this is a very strong level of resistance, I think, for me. And if we do get rejected, just look for a higher level of support. And as I said, potential inverse head and shoulders, a right shoulder before the breakout going into, say, October, November, looking to retrace to 0.011. And as I said, that would offer about 170% move from that pullback if it does come back for a higher level of support before looking for that breakout. So it's all about, right now, I think we are running into a key level of resistance. If we can see multiple closes above this, then it does give more likelihood that we're just going to move very impulsive back up to this target and quicker than I think. But at the same time, we have to consider the EMA, the same level of resistance we've ran into before. If we can come back for a higher low and then go for the break, I think that would be a fantastic move here for VRA. But nonetheless, just zooming out on the macro, you can see that the potential targets here are just, the opportunities are crazy. And this is the sort of area down in this sort of bottom zone here. When you're at these lows of the cycle, you kind of want to get in around here. You don't want to be buying the tops. You're missing out on a lot of opportunity. So again, not financial advice, guys. We have this key level of support, this red zone here at 0.004. If you start seeing VRA getting above and closing above that, we're looking very good. But failing that, come back for a higher low, a higher level of support, look for continuation of the trend. So it's all about holding this low here we have right now and this double bottom on the key support. But why I think we're potentially going to 30 cents is because if we go from our lows this cycle that we've recently come in and put in on August, retracing back to the current all-time high, I think 25 to 30 cents is a potential good shot, because you've got the 1 fib, which is the all-time high at 0.089, and if we start coming up and eventually taking that out, I think we could push up to the 1272, which is the, don't get me wrong, we are going to have some, if we can, we'll have large pullbacks along the way. I'm not saying it's just going to shoot up there overnight or within the space of a couple of weeks, because it probably won't. It could happen, but it probably won't. But I think if we come up and take out the all-time high, then we're looking for the move up to 24 to 25 cents at the 1272. And from current levels, that could be a whopping increase of around a 6,200% move. So just get your shoes ready, guys, because I think we're doing something very similar to what we've done in the past. And I think this is a rinse-repeat situation where we had a level of accumulation for a couple of years in the past, and it led to a massive breakout, okay? And right now we're going through something very similar. We broke out from this high, we had this bear market, and right now we've been in this even larger accumulation range looking for the next leg up going into 2025. For me, it's all about breaking through this key resistance at 0.004, and just quickly, I can get us a potential right shoulder target if I go down to this low. So potentially I would look for support on 0.003 if we start pulling back here, and you'll notice that that sort of area, the 0.03, sits on these previous weekly closes for this left shoulder. So if we've broke out here, ran into resistance on the weekly 20 EMA, come back for the right shoulder at 0.003, and if we can hold that, that's when you've got the inverse head and shoulders, and you're looking for the breakout and the run up back to 0.011, which is that 170% move. So we need to break above 0.004. If we fail to hold that, then we need to come back and hold 0.003. Okay, guys, so I hope you've enjoyed the content today. Macro, everything looks fantastic. This is just a massive accumulation range, rinse repeat of, I think, in the past, and I hope you enjoyed the content. From Chart Nerd TA, take care, peace out.